heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Apple's iPhone 16, it hits the stores today without the crucial AI features. Will people buy?
And Microsoft's AI power needs prompt the revival of a dormant reactor.
Plus, we hear from Salesforce CEO Marc Benioff and from the company's head of ventures. But first, let's just check in on these markets as we round out a risk-on week. We're up more than a percentage point, let's put it at that, for the NASDAQ 100. Remember, significant gains on this benchmark the previous week where we eclipsed a 5% gain. Extraordinary moves. We dial back on the day, Ed. We have digested the Federal Reserve whopping cuts. What does that now mean for a little bit of profit-taking happening in the Mag 7, for example? But what are you watching in terms of a key name?
Going straight to Apple. Apple up 0.6%. The iPhone 16 lineup goes on sale today. 60 countries around the world. You will have seen the scenes in New York City, Caro. Here in San Francisco, the same thing. There's a lot of questions about how or whether or not this will drive an upgrade cycle. So we think about the iPhone in the context of Apple's overall portfolio of products. It is critically important. That's why this pie chart tells the story. Right? I think there's a lot of skepticism about the innovation, the main innovation being a button on the side of the handset for camera control. Will that be enough? Is the delay of the release of Apple Intelligence, its generative AI platform, to a later date going to impact this cycle? Those are all things that we need to consider.
And we've got the perfect voice to do it with. Nabila Poval, Senior Research Director at IDC. You run the numbers. You tell us a future of how integral the iOS system and Apple remains. Look, are you anticipating growth, ultimately, of market share for Apple here?
So, we all recognize, right, at the time of launch, right, the features and everything that was announced, it was exciting, but a lot of people were disappointed. However, for those who, really follow the market, I think we all understand it's a long-term play, right? It is definitely a first step for Apple in a long journey and a big step, I think. So long-term, we do expect this to, improve and impact Apple in a very positive way. But this year, we're not expecting iPhone 16 launch, despite the hype and the marketing and the introduction of Apple Intelligence. Even if it's, a little bit rolled out a little later, we don't expect that to cause an upgrade cycle this year. We think things will be slow to pick up. But next year, however, we are expecting a 4% growth for Apple.
Why? Why the 4% acceleration?
So, we've moved it up. I think it was about 1 or 2%. But after, all the announcements of WWDC and when we put out our forecast, which was just a few weeks ago, given everything that we've seen already talked about Apple Intelligence and what's to come, right? I think it's not really about what's here today, but by next year, what's going to happen. We're going to get language being rolled out and hopefully the issues with the introduction of Apple Intelligence and EU and in China with partnerships being established. We think that will really help accelerate the momentum towards, the Apple Intelligence phones, whether it's 16, towards later next year or the 17 series especially, because I think right now it's still new in terms of the use cases, but as consumers start using it and they see their friends and family use it, and of course, marketing picks up, consumer awareness and education increases, we do think, that all those factors combined together will create sort of a bump of a certain percentage of people because the average refresh cycle now is at about 4 years and even 5 years, right? We know plenty of people that have iPhone 11s and iPhone X, but next year we're thinking it's going to lead to those with the 13s or the 14s even thinking, hey, you know what, I want the 17. So.
Nabila, you and I were together at Apple Park just last week. It seems like a long time ago. I think it's worth reminding the audience of how Tim Cook summarized this generation of phone. Listen to this.
The innovation and invention these products deliver will continue to deepen the meaningful impact they have on all of our lives. I'm proud of our teams and what they've accomplished, and I can't wait for you to experience these amazing products.
So then I look at your own research, your IDC forecast for shipments of smartphones in the years to come and generative AI. And that's my question for you. The innovation Tim Cook's talking about, it's not really on the hardware side, is it?
No, and they drove that message very, very clearly, right? It's really about the changing the user experience, right? How is these new features going to improve your life, and how are they going to make your lives easier? And of course, they showcase some of those use cases, but I think this is really, in the long run, going to change the complete way we interact with our smartphones, right? And I think that's when Gen AI or the super cycle, the refresh will really, really kick, when those digital assistants start coming into play, where we can just talk to our phones rather than having to go into multiple apps to do the tasks we need to do. And I'm really excited for when that happens.
So software innovation. The hardware innovation, well, that limelight got stolen by Huawei a few hours after Apple, it feels like. Look, not everyone wants a trifold phone, but how are we seeing innovation mean that we are pulling away from market share in China?
So definitely Huawei's launch, did get a lot of attention, and they were trying to showcase in a different way, right? This is our on the hardware side, right, with a foldable device. But the truth of the matter is, while Huawei does remain a very valid competitor for Apple in China, right? We've all seen the numbers recently. The foldable segment is still very niche, and we do believe that, in terms of foldables or this specific product impacting Apple negatively, I don't think so. Again, it's a very niche segment, and specifically, with the trifold device, it's still going to be even further niche within the foldables because of supply challenges that Huawei's seeing. But overall, it is a rocky road this year for Apple. We do hope that as they, resolve the partnership issues in China, especially because AI is a very more important, China market consumers are very spec-driven. When you compare globally in terms of importance of AI features to consumers, Chinese consumers are more likely to place it in determining doing a purchase.
Nabila, we were just showing pictures from around the world, including China. 60 countries, right? That's important. I think it's worth reminding ourselves, like, some people will buy some iPhone 16s. It's all relative to prior generations, right? But could you give any sort of geographical context on where you think this handset will do well and where it will do poorly?
In terms of, this coming for the rest of this year, we think definitely there's a large installed base of users, right? Like I mentioned, I'm sure we all, iPhone 11s and X, and regions where the refresh cycles are longer. I think developed markets where Apple has larger share, right, where there's lots of those installed base of older models. I think those are the regions that will this year. So essentially, it's not really Apple Intelligence that's going to motivate them to buy. It's time for them to upgrade anyway. And I think those new buyers or shorter refresh cycles, that's going to happen next year, especially with the trade-in promotions, right? Right now, it's more of a future-proof device with the Apple iPhone 16.
Nabila Popal, whose research at IDC on the smartphone market so closely followed. Thank you. Good to have you back here on Bloomberg Technology. Okay, coming up on the show, Elon Musk is now on the Secret Service's radar after deleting a post about assassination attempts on presidential candidates. We're going to cover that story next. This is Bloomberg Technology. Israel continues to carry out strikes against Lebanon, across Lebanon, stepping up hostilities against Hezbollah. Thousands of pagers and other devices exploding in Lebanon this week mark a new and deadly escalation in the use of supply chains against enemies, an urgency to reduce dependence on technology from rivals. Bloomberg's Dan Flatley covers national security and joins us from Washington. And you've done some deep reporting with colleagues on this idea that, particularly for cheap goods, that when you go across the supply chain and the assembly of these products, they present a risk because they can be weaponized. What did you learn?
Yeah, it's a fascinating topic. And obviously what happened in Lebanon with these pagers and walkie-talkies really, I think, crystallized the issue in a lot of people's minds, where before we knew coming out of the pandemic that these supply chains were a big deal because we were worried about the cutoff of critical, PPE and other things like that. But this is taking it to a whole nother level. I mean, I think you have to kind of think about this in two categories, right? You have what happened in Lebanon, which was, according to what we've been able to ascertain, Israel has not claimed responsibility for this, but, the sense is that they were involved, obviously. And it was a specific hack and a specific sort of intelligence operation that has been used in various contexts, for a long time. This is probably the most dramatic, outcome of that. But that is something that's been around for a while. And then you have this sort of separate but related issue of supply chains, hacking, critical infrastructure, and both of those two things kind of come together in our story, which sort of explains and looks at how, as supply chains have both been concentrated in some countries like China, for instance, there's a vulnerability there, but at the same time, diversifying your supply chains also creates some vulnerabilities because you have, more entry points for people to kind of exploit. So it's kind of there's not a lot of great options, but I think the one thing that folks that we talked to said was, we just need more visibility into the supply chain. And so that's one of the takeaways.
Let's talk about that visibility, because many would say, look, it's now that the US says this, but previously the US and spies have a history of taking advantage of the United States dominance in the supply chain. Now the shoe's on the other foot. What can be done for investment by US companies to just track the supply chain?
Absolutely. I mean, it's a great question because it kind of goes both ways, right? We've seen this in the context of the Russia-Ukraine war, where the U.S. government has really been leaning on companies to get more visibility into the supply chains going out. Who are you exporting to? Not only who is your customer, but who's your customer's customer? And there's a big push on that from the government side. And actually, on Capitol Hill, a couple of weeks ago, there was a big hearing, and Intel and Texas Instruments and some other companies were really pressed on this. And basically what they were saying was it's very difficult to get that kind of clarity on not just who you're selling to, but who the people that you're selling to are selling to. So that goes out. And then coming in, same problem, because you're not necessarily sourcing, when you're buying a vast quantity of these types of material.
Yes.
Semiconductors or whatever, you're not buying it from, you may be buying it from one point, but that vendor is getting it from multiple points. And so it's kind of the double-edged swords of globalization that we're really seeing here. So it's a very difficult problem to solve.
This is where the Internet of Things comes in. Bloomberg, Stan Flatley, we really appreciate your time. Thank you. Meanwhile, one of Elon Musk's posts on X is facing an investigation by the Secret Service. Following the latest assassination attempt of former President Donald Trump, Musk took to X, writing, quote, "And no one is even trying to assassinate Biden, Kamala," in a now deleted post. For more, Bloomberg's Dana Hull joins us for more. And you learned about this investigation through Freedom of Information Act requests to the Secret Service. What did you ask for?
Well, so to back up for a minute, when Elon posts things, they see an incredibly wide audience. He has millions of followers. His tweets are often amplified by others. And what was curious to me was that, he posted this on Sunday and then he deleted it. And I was wondering, why did he delete it? And I deleted it. And I think I actually tweeted at him like, hey, did you get a phone call from the FBI or the Secret Service? So then I just filed a request to the Secret Service asking, do you have records? Are you investigating this? I'd like any email correspondence. And what's funny about FOIA, and there's a little bit of an art to this, is that usually it takes quite a while to pry records loose or to get a response. But I immediately got a response. Like within 24 hours, they sent me a response. And simultaneously, our colleague Jason Leopold, who is like the master of FOIA requests, had also done the same thing. So I was talking to Jason like, hey, I just wanted to let you know that I filed this request, and he's like, oh, I did the same thing, and we've gotten very similar responses. So,
Dana, just real quick, I mean, it is an art. I've looked to you so often to try and get hold of documentation because you cannot hide from documentation. The response of the Secret Service is really interesting because in the actual response itself, and I'm just going to look down at my screen because I don't want to get it wrong, that they withheld certain things because disclosure could reasonably be expected to interfere with enforcement proceedings. And it's that sentence alone that lets us know what's going on in the background between Musk and the Secret Service.
Correct. And to be clear, we shouldn't jump to a conclusion that this means that there will be an enforcement proceeding or that there will be a big outcome. But I think this Secret Service, by law, I mean, they have to investigate anything that could be seen as a credible threat or could be seen as something that's a potential incitement to violence. And so it's fairly standard operating procedure that they would look into this. For me, what I just want to know is what happened behind the scenes. Was he urged to take this down by investors or members of his family or people in his inner circle? Was there a whole back and forth, with campaigns? Or did the Secret Service call him on the phone and be like, hey, buddy, this is maybe not so great? I just would love to know exactly what happened in terms of what inspired him to take it down, because he got quite a lot of backlash and it was up for several hours.
Anna Hull, the art of reporting. Thank you. Now, Palantir has won a $100 million contract that will extend access to AI targeting tools to more US military personnel via the company's digital warfare platform. Now, this will help create a picture of the same battlefield on thousands of digital screens simultaneously. And it's been used by the US military to help identify targets for airstrikes in the Middle East this year. Bloomberg is reporting that. Ed.
Okay, coming up here on Bloomberg Technology, we're going to talk about Microsoft's energy needs and how it's prompting the revival of a dormant reactor. Also, in line with that story, the name behind it, that is the name behind it, and the stock is up significantly. Let's get into the detail next. This is Bloomberg Technology.
Constellation Energy. It's the owner of the shuttered 3 Mile Island nuclear plant over in Pennsylvania. It's hitting record highs in terms of its share price because it's going to restart the reactor and sell its output to Microsoft to power, you guessed it, artificial intelligence. Bloomberg's Dina Bass reported on this. And actually, there is this flurry need for energy. And we're turning to nuclear now?
Absolutely, because it's not just energy that Microsoft, Amazon, Google, and all the cloud hyperscalers are looking for. They want clean energy. And, I think often we talk about solar and wind. Nuclear is also clean. It has some different components. It's always on, whereas wind and solar are a bit more variable. That's both a strength and weakness. One of the reasons Constellation had shut down this site 5 years ago is that they didn't have, the customer demand for that always on, because for green energy, people were trying to pair things with solar and wind, which are, again, more variable. In comes Microsoft, right, which needs, tremendous amount of clean energy to run its ever-expanding fleet of data centers and meet its climate pledges. And those data centers always need to be on. So, Microsoft Energy Chief Bobby Hollis told me it's a good match.
It's an interesting deal for Constellation. Obviously, Constellation's shares are up significantly. They have to invest $1.6 billion, but they get a customer who's pledging or contractually obliged to buy energy for 20 years. That's the mechanics of the deal. But I guess we have short memories, right, Dina? I remember, let's say 2 years ago, when not just Microsoft, but Amazon as well, had very ambitious energy and climate targets, right? How much is that a priority for Microsoft?
So this has been a real issue for Microsoft. They still have these climate targets. One is, all data centers running on green energy by 2025. And the other, which is the one that they're really not sure they can make at this point because of AI, which is their pledge to be carbon negative by 2030. They told us last spring that pledge has been imperiled by the dramatic expansion in AI. So the deal today helps them, but it doesn't help them on the hardest problem. The deal today gives them green energy, and so it helps them with the green energy goal. But the biggest reason they are worried about their carbon negative by 2030 goal is other embodied emissions from concrete, steel, and chips, which are used in these data centers. So, this part of the deal today, that does not help them with that. That is, as Bobby Hollis told me, a harder problem.
Bloomberg's Dina Bass on an important deal, but also important development in the world of AI. Thank you. Let's focus on the Xbox side of Microsoft's business, and in particular how its president, Sarah Bond, is laying the groundwork for the company's next console in a bid to catch up to Sony and Nintendo. Bloomberg's Cecilia D'Anastasio joins us now. This is a deep dive into Sarah Bond, a relative outsider, but now in what's a massive gaming company, or ARM, she's really important. What is she trying to do?
Sarah Bond is trying to move the Xbox business beyond the Xbox console. Head of Microsoft Gaming, Phil Spencer, says that they've been selling consoles to the same 200 million global households, and they really want Xbox to mean more than the plastic box in your living room. Sarah Bond's mandate is to expand Xbox's games into phones, into next generation hardware, sure, but also, potentially handheld, which is something that she and her boss have sort of teased at.
Your story is so fascinating because you go into the relationship between her and her boss, how they turned to HR to really ensure that they could communicate more efficiently, but also her history at T-Mobile. What is she going to bring to the table, Cecilia?
Yeah, Sarah Bond's history from T-Mobile really gives Microsoft expertise that was lacking in the mobile world and in the mobile gaming world in particular. So at T-Mobile, she's someone who knows a lot about subscriptions, a lot about how to keep people coming back to a product, and also how to trim subscriptions in a way where users don't feel bloated by extra services they don't need. And Microsoft has a sort of Netflix for game service called the Game Pass that has 34 million subscribers, probably more at this point because that data is old. And Sarah Bond is hoping to reach gamers who want sort of a subscription product using Game Pass, which will be available on phones, on PCs, on tablets, on Xbox, on smart TVs, whatever you have. Xbox hopes to be there.
Cecilia, really quick, a big impetus for the Activision deal was mobile gaming, and I'm yet to see the story there. What is it?
It's a little challenging. So when Microsoft announced the deal with Activision, mobile was the fastest growing segment of the games industry. Now, global consumer spending on mobile games dropped 2% in 2023. It's still, an over $100 billion industry, but, PC gaming is actually the fastest growing sector of the games industry this year, according to one recent study. So it's going to be a little challenging for Sarah to kind of make good on the Activision acquisition. And at the same time, she has high hopes because so many people have mobile phones.
Cecilia, it's a great report. We thank you. Cecilia D'Anastasio, we thank you. Coming up, OpenAI's latest fundraising is nearly done. Some investors will find out today if they made the cut or not. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Plenty to be discussing when it comes to AI, as always, and OpenAI's latest fundraising is near completion, with prospective investors set to find out today whether they'll be part of the deal, sort of according to sources. Bloomberg's Katie Roof has more. Everyone wanting in on this?
Well, certainly a lot of venture firms are, and strategics. We've reported that Microsoft, which is an existing investor, will be putting in more, but also NVIDIA and Apple. And then, a slew of other investors are trying to put money in. They'll find out today after it was oversubscribed by billions of dollars.
What I find interesting, Katie, a source told me a couple of weeks ago, you may remember, that NVIDIA was only going to put in, say, $100 million. And there's other reports out there that there's a threshold. But it's not a surprise, is it, that the world's most important AI company has investors of all kinds fighting to get over what is a relatively rare round?
Sure. Well, they raised last year at an $86 billion valuation, so it's a significant premium to that. I think, there's no question there's a lot of demand to be in, this transformative AI company, but at what price? That was the real question. But they've certainly had plenty of demand at this $150 billion pre-money valuation.
Yeah, that was a liquidity event for for the employees, that 86 billion, phenomenal at the rate that they've managed to raise. How important is the strategic side of this? How much does OpenAI want them at the cap table?
Well, certainly it's good to have trillion-dollar companies in your court. It remains to be seen, what exactly they have in mind, what kinds of partnerships they want to expand upon. But I think that it's a very competitive race to be the leader in AI. And if you have companies like Microsoft, Apple, and NVIDIA betting on you, then it makes you even more competitive.
Katie Roof, we thank you. Now, another side of AI is its regulation. The United Nations expert group says AI governance discussions have been too fragmented. The group includes government officials, academics, other executives actually from Google, Microsoft, and indeed OpenAI. And it just came out with a report suggesting measures like establishing a fund to support poorer countries looking to work on artificial intelligence and calling on countries to limit military use of AI to prevent human rights violations. Meanwhile, we sat down with the president of Latvia yesterday and asked him whether AI should be more regulated. Take a listen.
The use of social media, artificial intelligence for disinformation, deepfakes, interference in elections, I think we need some framework. But at the same time, and this is sometimes a challenge for the European Union and about the European Union, let's face it, we sometimes, back in Europe, get overly regulatory.
Let's keep the conversation going with NYU Professor Emeritus and AI expert Gary Marcus, who's known for his critique of the booming AI industry. He's also the author of a new book called Taming Silicon Valley, How We Can Ensure That AI Works for Us. And he joins us now. And Gary, based on the idea of fragmentation of regulation, I always think about how AI technology is required to respect the laws and rules of various jurisdictions. And at the same time, technology isn't bound by jurisdictions or borders. What do you make of the sort of preamble that we're fragmented?
I mean, we certainly are fragmented. I think when we think about global AI governance, there's actually an advantage to the companies in having global AI governance, and that is that fragmentation. You think about how expensive it is to train these models. You saw earlier today Microsoft buying the rights to the energy of 3 Mile Island, 100%. It's very expensive to train these models. And if you have to do that differently for every jurisdiction because they each have their own rules, that would be an insane amount of power, especially when we're talking about maybe making bigger models 100 times, 1,000 times, 10,000 times bigger than existing models. So fragmentation is actually a problem for the companies. It's also a problem for the world. I mean, we really do want to have some uniform approach to all of the downsides, things like non-consensual deepfake porn, misinformation, and so forth. There are many downsides, and we want a coordinated response to it. So I think it's actually in everybody's interest to have some coordination, but fragmentation is the default.
Let's talk about coordination. The United Nations has put up this thought process report, and now they want an independent scientific panel on artificial intelligence, in the same way that they almost have with climate change. Is that going to help? Is that going to make sure that more people are at the table other than basically the G7 and some of the biggest companies in the world?
I mean, God is in the details, but I think it's a good start. I think absolutely we need more independent scientists weighing in. We also need authority if something doesn't work to do something. So one of the most interesting things that happened in the last couple of weeks is OpenAI put out a new model, and they said there's a bioweapons risk here. Now, they might be right about that, they might be wrong about it, but let's suppose they're right about it. They decided, despite that risk, they would go ahead and release it. And that was really just ultimately Sam Altman's decision and nobody else's. There was Senate testimony earlier in the week where a former employee and a former board member said basically they didn't feel listened to, right? And so OpenAI, Sam Altman doesn't have to listen. If his employees say the bioweapons risk here is serious, maybe not for this model, but the next model, he can go ahead anyway and say, but I need to make back the money for the $150 billion valuation, which, by the way, is not a trivial thing. And there's also no outside input. So even if this IPC-like panel says, this is dangerous, there's nothing in the UN that can immediately do anything about it. There's nothing in the US government that can immediately do anything about it. So it's a very good, I think, thought experiment. Like, when this stuff gets worse, who's making these decisions?
I mean, but this has happened time and time again. And we always go, they should self-regulate. And in a way, Sam Altman did just that. You just told me that you're coughing a bit because you're basically exhausted, having written this book in 2 months out of sheer anger, in a way. What's the response to the anger? What's the answer here?
Well, I mean, the anger was partly, I went to the Senate, I testified next to Sam Altman, and he talked about not just self-regulation, but real regulation. The Senate, bipartisan, all talked about this. This was May of last year. Nothing has actually happened. There's been no, major piece of legislation in the United States to deal with any of this. And self-regulation is not going to happen. I mean, even when they make promises, they often back down, and they're not. They're going to agree to things like information sharing. They're not going to agree to, deferring the decision about whether to release this new product that maybe finally makes them some money to the general public. And they're not making money right now. I mean, OpenAI had a $5 billion operating loss last year.
Let's go back to what you just said on OpenAI. It's not a trivial amount of money, but the stakes are also very high. How much does that keep you up at night, that we have a single company with quite a confusing governance structure that has the world's biggest technology companies and investors fighting over around, and it's releasing technology at a cadence that you outlined?
I mean, everybody should have been worried at the drama last year. It sort of made for an amazing, Netflix special or something like that when Sam Altman was fired and rehired and all of this drama. But it also says, who is running this company and what are the checks and balances, right? And the ultimate answer is Sam is running it. There are no checks and balances. And, we should be worried. If a company can't even govern itself internally, a lot of people left after that incident, we should be worried. It's a lot of power. And we should be worried not just about OpenAI, but the whole industry. Responsible AI, was a watchword for the entire field for a few years. And now it's almost like nobody really cares because there's so much money on the table.
We had the president of Latvia here yesterday from the European Union. You have UNGA next week. Do you have any hope that actually these sort of roundtable, state-level discussions will yield some kind of framework in which the world's kept safe from AI?
I have a mild bit of hope, but I think that we really need the public to be involved and say this matters. So, politicians always have to weigh competing interests. They get a lot of money from the tech companies. They're involved with the tech companies in various ways. If the public doesn't speak up, I think we will see very light regulation, if any at all. The reason I wrote this book is I think making these decisions is the most important thing that we can do, or one of the most important things we can do in the world in the next few years. Think about what happened with social media. We waited too long, and we entrenched a set of practices that now lead to all kinds of polarization, bad for teenage girls and so forth. And it's hard to fix these things. We have to get AI policy right now.
AI expert Gary Marcus, so good to have you. We appreciate it. Ed, what are you looking at?
I think we should reflect on the week in markets, Caro. I'm going to the Mag 7 index. It's a Bloomberg index of those magnificent 7 names, because we spent a lot of the week talking about them in the context of the Fed, that, OK, we now know where we stand with rates finally being cut by 50 basis points going lower. There's a valuation question around some of those that have had incredible performance in the first half of this year and actually over a longer duration. And then there's the idea of, well, what happens if we do or don't get a recession? It very closely mirrors the NASDAQ 100 that you showed earlier in the show. But yeah, no duh. A lot of the biggest points drivers on that index are the Mag 7 anyway, and it's just interesting to keep our eye on the trajectory of them. Will they continue to be the story in this market? OK, coming up in the program, we're going to hear from Salesforce CEO Marc Benioff as they launch some new AI tools over at Dreamforce. That conversation's coming up next. This is Bloomberg Technology.
Salesforce is launching a slew of new Gen AI tools known as agents. CEO Marc Benioff spoke with Bloomberg's Emily Chang at their annual Dreamforce event in San Francisco. Take a listen.
These customers have been convinced something that's not true, that they have to buy an LLM, they have to go to a hyperscaler, they have to get a database, they have to buy a security technology, they have to choose a chip, they have to hook it all together themselves, they have to DIY their AI. It's not true. You do not have to DIY your AI. And when we started the show, they didn't really believe it. So that's why we created a whole factory across the street, as you saw in Moscone West, where we've put more than 10,000 customers through already to show them that on the Salesforce platform, which they've already been committed to for more than 20 years, had great success in sales and service and marketing and communications and commerce and analytics and Slack and in all of these technologies, that now they're also building AI. And this is a shock to them, and it's exciting for us because we're showing them how, once again, we're future-proofing their company with the Salesforce platform.
So you basically DIY'd it for them. And
well, that's our job. We're a software company.
What models you've built it on? Is it
we have our own, we have many, and they don't need to know.
Okay.
And they don't, why, what chip am I using? You know, what hyperscaler? They don't care. They don't care what I'm using. You know, it's like, what type of flour is in the cake? What kind of sugar did I buy at the store? Why does it matter? Do you like the cake? Is this the final product that you like?
All right.
And I think that for our customers, they don't want to know all the pieces. They want to know, does this work? And can they make a greater success for their own companies?
That was Salesforce CEO Marc Benioff. Staying with Salesforce, its investment arm, Salesforce Ventures, just announced a $500 million investment fund for AI that is expanding. Here to discuss is John Somorjai, Salesforce Ventures president. And I just want to do the mechanics of this really quickly. You basically invest now with almost like $1 billion of capital to play with off balance sheet from Salesforce.
Right.
And you're looking for things that add to what Marc Benioff was just talking about, right? You're looking for the next frontier of an actual Gen AI tool.
Exactly. So we feel that AI is one of the most significant innovations in our lifetime. And we're looking for entrepreneurs who are helping to solve business challenges in unprecedented ways that AI allows them to do so. And last year, we announced a $500 million fund. We invested in 24 companies with that money, and we decided to expand it to up to $1 billion now to invest in this very exciting AI innovation.
We just listened to Marc Benioff talk about why Salesforce's generative AI offering is better than any company of any size engaging with the GPU provider right through to application layer. And it sounds like they're pretty happy with what they've got to offer. So how can you go and find something new that Salesforce doesn't already have?
Well, we're seeing interesting companies develop new business applications that are in new areas. Like, for example, we invested in a company called Runway. And if you're familiar with the Oscar award-winning film, Everything Everywhere All at Once, they used Runway technology to take their editing staff from, normally hundreds of people editing this very complex movie down to a handful of people using their technology. And this is real productivity value that's being delivered. We're seeing interesting developments in new models, in new vertical applications, in AI security, in areas that we do not cover today, but we want to partner with these companies and deliver more solutions to our customers.
You're in Anthropic. You're not listed as one of the wannabes in OpenAI. Why not?
So we partner with both OpenAI and Anthropic and a number of other LLM providers. We also have our own LLMs as well, our large language models. And we are very excited about what we've invested in with Anthropic. We are in Hugging Face, which is an open source provider of models, and we're also in Mistral, which is another provider, and so we feel pretty good about the investments that we've made in the foundational model level, and now we're looking to invest in different types of companies with this new $500 million fund.
What's so interesting is 4 of Salesforce's last 5 acquisitions have been funded at some point by Salesforce Ventures. How much do you end up realizing you should buy these companies, not just strategically invest in them?
Well, one of the benefits of investing in a company first is that you do get a chance to work with them and see how the technology can help deliver success to your customers. And we do partner very, very well with a lot of the companies that we invest in. But keep in mind, we've made investments in over 630 companies over the past 15 years. We've only acquired 20 of the companies that we've invested in. Wow. So it's a very small minority of the businesses that we've invested in. But we're very excited about some of the recent acquisitions we've made out of the fund. Companies like Spiff, which do incentive compensation management. AirKit, which is a big foundational element of our Agentforce technology. We acquired them last year. Adam Evans, the founder of AirKit, is a two-time boomerang back to Salesforce. We're really excited to have him.
John, tens of thousands of people have descended on our city for Dreamforce.
So exciting.
I've always thought about it as a customer event. I know loads of people that either work at Salesforce, MuleSoft, or they use CRM, right, historically. For you, what's the week been like in terms of unearthing interesting founders, interesting startups that you might write a check for?
I think this week is one of the most exciting weeks I've ever been in San Francisco. The energy in the city is really palpable, and you're seeing CIOs and C-suite executives meeting with entrepreneurs at Dreamforce together, all at Moscone Center. We had over 45,000 people in person. And from my perspective, I got to see...
I know, the traffic was dreadful last night, by the way. Thank you very much.
From my perspective, I got to meet with some fascinating founders who are really redefining the way AI is going to work in the future and solving critical business challenges. So I'm very excited about what I saw this week.
John, it's great to have some time with you. Thank you, John Somorjai of Salesforce Ventures. Now, coming up...
Great to be with you.
The reluctance to adopt EVs isn't universal. We're going to hear from the CEO of Ford Pro on how commercial customers are ahead of the curve on the EV transition. This is Bloomberg Technology.
Demand has been really strong. In the U.S., we've had incredible large infrastructure projects going on, the overhaul of the grid that's going on, AI demands on electrification, telecom, and everything is being delivered, both services and goods. And this has created a whole new sets of business for us. So we see incredible demand across all our vehicle lines, both here and in Europe.
Ford Pro CEO Ted Cannis there talking about the accelerating commercial adoption of EVs. And he's there at the outset of a new and revamped Wall Street Week with David Weston now joins us because the host of that show that we're about to be able to watch in full later today, David.
And Ted Cannis is a friend of yours, of this show, actually. I've seen him on this program. He's a character, yeah.
But the demand seems insatiable, that's what he said.
Well, and he's always been somewhat rah-rah, I think you'd agree. But the thing that I didn't really understand until I'd gone out there and talked to him and Jim Farley, the CEO of Ford, is there are two stories about EVs. I'd heard mainly one story, and one of them is the consumer side, which is slowing down all around the world, frankly. And then there's the commercial side, these delivery vans and emergency vehicles, and that one is just as robust as ever. And as you know, Ford has a significant advantage in that. They have something like 40% market share in that market.
I think the thing you learn about the EV industry is it's complicated, David. You make that point so well. So how do we take that to Wall Street Week? There's always a money story behind everything. And within an industry, and even on Wall Street, there's a culture story behind it. How are you going to tell us that?
The question is really, and this is the larger story, you're exactly right, Ed. The question is, what does this mean for an auto industry, a Detroit auto industry that's trying to rebound from some very dark days, as you know, back in the 80s and the 90s, and actually going to the brink of extinction during the great financial crisis. What does that mean? They think that the EV impetus will really drive them. They're having a little trouble on the consumer side, but Ford particularly is relying heavily on the commercial side. So it really raises the question for investors, is this a good investment or not? Is this someplace you want to put your money or not into this resurgent auto industry? And one of the things we talk about with Jim Farley particularly is China. And China coming on the scene and the very high quality, very low cost, something he says is a little bit like Toyota, because he used to work, as you know, Jim Farley, at Toyota, even though he comes from Detroit. Right. He worked for Detroit. He saw those bad old days.
It's going to be fascinating. China, important for higher education. You delve into that sector as well as the business of restaurants. You don't want to miss it. Wall Street Week, later with David Weston. 6 p.m. New York time. That does it, though, for this edition of Bloomberg Technology. Ed.
What a week in technology. Recap on the podcast. You know exactly where to find it. From New York and SF, This is Bloomberg.